Okay, for this video, we want to go through a sample form 709, which is a U.S. gift tax return, and this is going to be for the 2024 tax year. Now, I've got a couple of pieces in front of us. I'll go through all those first, and then we'll get into the fact pattern and then go through the form itself. So, we've got the full 709 here. This is going to be for the 2024 tax year. We've also got a copy of the 2021 gift tax return for the same taxpayer, and we'll need that because they have some prior year reportable gifts that need to be reported on 2024. We've also got the Form 709 instructions for the 2024 year, and this is obviously a good resource in how to complete the return, but it also contains some tables that we're going to need to reference as well. So we've got those three pieces and then just one slide here covering some background on the 709 and then more details on the fact pattern, which we'll need in order to complete the return. So if we start with this slide, go through some of the basics here. So this Form 709 is filed for reporting any taxable gifts that are made during the year. Now, in general, you need to file this form if you're a U.S. individual, so that's U.S. citizens or residents, and you make those taxable gifts during the year. Or in some cases, if you make gifts of what are called future interests, like something to a trust, you might have to report that as well. In this fact pattern, we're going to have a very straightforward example, so these types of issues aren't going to apply for this video. Now, generally, when we talk about gift tax returns, it's the donor, so the person that's giving the property away, they're responsible for filing the gift tax return. It's not the recipient of the gift. That's generally the standard. Now, in 2024, the annual gift tax exclusion was $18,000 per donor per recipient, and we can see the prior year amounts there as well. So it was $16K in 2022. 17 for 2023, and for 2025 we're looking at a $19,000 exclusion. So let's have a look at the fact pattern now and then discuss a little bit about items that are just not going to apply to this, but they might be applicable in your situation. So always important to consult with a tax professional just to make sure you're not missing anything. So in this fact pattern, we have Jane, taxpayer. She is a single filing taxpayer, has never been married, and she has one son, Adam. And in 2024, she made a gift of Bitcoin to her friend, John. Now, the fair market value of those Bitcoins was $26,303. That's in US dollars on the date of the gift. And in 2021, so several years ago, she made a cash gift of $16K to her son, and that was properly reported on the 709. Now, apart from these gifts, there's no other gifts in 2024 and no other prior year gifts apart from what we have in 2021. Now, the items that we're not going to have in this fact pattern, because Jane has never been married, there are no DSU issues. So DSU is a deceased spousal unused exclusion, and essentially how that kind of works is if you were married and your spouse predeceases you, any unused exclusion that they might have when computing their gift or estate tax can be transferred to you. Doesn't apply here because she was never married, so just it doesn't apply to this fact pattern. Now, this is a gift of digital assets, so we're gifting Bitcoin. Pretty straightforward, similar to gifts of cash. The 709 can be substantially more complicated if you're transferring things like real property, particularly if it has a mortgage attached to it, any transfers to trusts, if you have any transfers of closely held business interests, let's say you're transferring LLC units, if you're making any transfers to skip persons, so these are, you can think of these as grandkids, then you're going to have a little bit more of a complicated reporting obligation. And in this example, we don't have any GST, so generation skipping transfer tax issues. And again, that would apply usually to transfers to what is considered a skip person. All right, so let's have a look at the tax return. So we'll go through the 709 and then we'll come back to the 2021 return when it's needed. So we've got the 2024 return here. Remember, this is being filled out by Jane. She's the person that's the donor. She's the one that contributed the property to her friend John. So we've got Jane's information up here. She's a resident of Florida and her citizenship is US of A. If we move on to questions 14 through 21 here, these do not apply to us. We did not file an extension, so line 16 is blank. Now line 17, we've entered one. Schedule A is where we list the all the donees, so those are the recipients of the gifts and what was given to them. In this case, we just have the one gift, right? We have the gift of the Bitcoin to John. So when we have a look at Schedule A, you'll see that it is just one donee. Now, line 18A, we have entered yes because this is not the first gift tax return that she's filed. We have had to file in a prior year, all right? Now, gifts to spouses, gifts by spouses to third parties doesn't apply to us, right? Because we don't, she's not currently married, wasn't previously married. And so the same issue applies. Question 20 answered no for the DSU issue. Now, this is a new question in the past few years. Question 21, are any gifts or transfers on this form gifts of digital assets? And in our case, the answer is yes, right? We are gifting Bitcoin, and so we're going to answer yes and then report that taxable gift on the return. Now, in part 2, we need to complete schedules A and B first, and then we'll come back to the amount of the gift that is taxable, and then do a tax computation using the tables in the gift tax instructions. So if we go to Schedule A Part 4, well, let's go to Schedule A first. But Part 3, spousal consent on gifts to third parties. We don't have any consent elections here because Jane is not married, so that's just answered no. And then we can skip lines 2 through 7. So here on Schedule A, we have the computation of the taxable gifts. Now, if you were looking at any prior years, this format is a little different, right? So they've updated this schedule. If we just quickly look at the 2021 return, Schedule A, you notice a little different here, right? The Schedule A is a little smaller. It's in a landscape format in 2024. It's portrait in prior years. And so the good thing about the changes here is there's a lot more space to enter multiple donees, multiple gifts, right? With the prior year returns, if you had one gift, you could fit it all in there. But if you had multiple gifts, you had to attach a statement and list all of those separately because there just wasn't enough room on the form. That's been changed, so that's a plus to the updated Schedule A for 2024. Now, item A, we are not gifting anything that has a valuation discount. So a valuation discount would be things like lack of marketability discounts or minority interest discounts and business interests. In this case, it doesn't apply to us. We're gifting Bitcoin, so that's answered no. Now, the gifts that are being reported here. So we have the name and address of the recipient, so the donee in this case, the relationship to the donor, and then a description of the gift. So Jane transferred 0.2675 Bitcoin to John, and the date of that gift was December 10th, 2024. We have the fair market value of the transfer on the date of gift. There's the 26,303. And then Jane reports her basis in the property, which was a little over $9,000. That's what she paid for it, right? Now, we're not doing any split gifts here because we're not, there's no married component here, so no gift splitting. So the net transfer that's being submitted is going to be the same value there, $26,303. Now, if you total all the amounts up here, at the bottom of Schedule A, and then it asks us to move on to the next page to calculate the taxable gifts based on what you contributed, right? How many donors, how many donees and how many gifts, and how much of the gift exceeded the annual exclusion. So the total value of the gifts here is just the same, $26,303, because we only have one gift to one donor, right? Or donee, that is. If you had multiple gifts to multiple donees, then you would add all those up. In our case, it's just the same 26,303. Now, the total annual exclusions, one gift, one donee. So we have the $18,000 applied there. That's the annual exclusion for 2024. And so the difference there is the amount of the includable gift. So this is the gift of the value of the property that exceeds the annual exclusion. So this is why we had to report it, because she gifted property in excess of that $18,000 mark. Now, in our case here, we don't have any deductions that are being applied here. So we don't have any marital deductions, charitable deductions. So lines 4 through 7 are simply blank. So we're left with the same 8303, and we don't have any GST that's applicable to this form. So once we have this schedule completed, it asks us, right, add lines 9 and 10, enter here, and on page 1, part 2, tax computation, line 1. So if we go back up to page 1, line 1, there we see the amount of taxable gifts, the amount of includable gifts for the year is $8,303. All right, so that's the current year stuff finished. Now, with the current year return, you have to reconcile any prior year reportable gifts that you previously reported on any other 709. So now we move on to Schedule B. So if we scroll back down here, we're going to go past Schedule A, and we're on to Schedule B, gifts from prior periods. So this is where you would look back at all of those gifts that were reported on any prior year filed 709s. And so you will see here that the only one that we have filed previously is a 2021 return for a 2021 Form 709. So if we go back to the form, and we'll have a look at the reported gifts here, we could see here we reported the cash transfer, right, of $16,000, and that was made in 2021. And the exclusion in the current year in 2021 was $15,000. So we had $1,000 of reportable gift, and that's what was reported in 2021. So we have the $1,000 in a reportable gift. We have the $180 of credit that was applied, and so those are the amounts that we're reporting on Schedule B. So we've got 2021. Where did we file the return? Which IRS office? The taxable gift amount was $1,000, and then the amount of that applicable credit or unified credit that was applied against the gift tax was $180. And so they have separate columns here, one for any gifts credit applied after December 31st, 1976, and then they have a separate column for anything before Jan 1, 1977. So once you complete the Schedule B, you can add up those totals down here and then report the same amounts back up on page 1. Now, a thing to note on the gifts from prior periods, you can, if the total amount of gifts that were reported in prior periods is under $500,000, you can just simply look back at the prior year returns and pull these numbers and then transfer them right over to Schedule B. If you have gifts exceeding the $500,000, then you've got to do a recalculation of the credit that applied. And so the recalculation can be done, well, there's worksheets within the form instructions. If you jump down to, let's see, so gifts from prior periods, they have a note here, right, for column C. So to determine the amount of the unified credit, use this worksheet for prior periods, unless your prior gifts total $500,000 or less. So if the total gifts is $500,000 or less, you can just enter the amount of the credit that was actually applied in the prior period, so just what was actually reported on the prior year tax returns. If you have gifts over $500,000, then you've got to redetermine the amount of the credit for those years. All right. Okay, so we'll go back to the 2024 return. Okay, so we've got our $1,000 in taxable gifts. We have $180 of prior year unified credit. And so if we go back up to page 1, we report on line 2 the $1,000 from Schedule B, line 3, and there's our $1,000. So the total taxable gifts for the current year, the prior years, on this return is going to be $9,303. Now we have to calculate the amount of tax on two amounts, right? So one, we calculate it on the total gifts, right? So the amount reported on line 3, and then we calculate the tax on those prior period gifts, the amount reported on line 2. So this is where we can now go back to the form instructions and look at those tax tables. So if we go back to the form instructions here, and we go and scroll down to the tax computation schedule, so it's down here, tax computation for page 1 of the form 709, and the table is right here, so it's at the top of page 22 of these form instructions for the year. So what we're looking for is where do our amount of gifts fall within these ranges between column A and column B. So if we see the very first line item here is if the taxable amount of the gift is 0 but not over $10,000, then the tax that we're going to apply is 0 plus 18% of that excess amount. So we're falling within that first marginal bracket. So in our case, both of our amounts are going to be within that range. So it makes our calculation kind of easy. So if we go back to the page 1, we have two amounts here, right? So we have our 9303. So if we take that times 18%, we're left with 1675. So that's reported up on line 4. And then we have the $1,000 of the prior year gifts, again 18%, and now we have $180. So that's how we're calculating those gifts amounts. If these amounts were much larger, then you might find that you're somewhere within these ranges down here, and then so you would take the tax reported in column C and then add whatever the percentage is of the excess. So it's how all these marginal rate tables work. If you're doing the same thing for, let's say, a Form 1040, you would see a similar schedule like this. All right. So now once that is done, we go back to line 6. We add up lines 4 and 5 to get to $1,495. Now the next step is to pull through the credit amount for the current year, right? And so this is going to be reported on line 7. So you can find these amounts within the form instructions. Again, there's a separate table. So if we go back to the form instructions, we're going to look at, it should be just above. Okay, here we go. So you're looking for the basic exclusion and credit amounts as recalculated for 2024. And so what you'll see is a separate column for the exclusion amount and then the credit amount. So for 2024, we're looking at $5.389 million, so $5,389,800. This is the value for 2024 that's going to be reported on line 7. So we've got $5,389,800. The amount of credit, applicable credit, that's been used in prior periods is our $180 figure. So this is coming through from Schedule B, line 1, column 2, or column C rather. So we have $180 reported on line 8, and then we subtract that from the amount on line 7. So the balance remaining for this taxpayer is $5,389,620. Okay? Now, line 10 doesn't apply to us. It's asking enter 20% of the amount allowed as a specific exemption for gifts made after September 8, 1976, but before Jan 1, 1977. So that's why that value is left blank for us. So line 11, we're left with the same value, $5,389,620. Now, the applicable credit amount on line 12 asks us to enter the smaller of line 6 or line 11. Well, the smaller one is going to be that $1,495. We don't have any credit for foreign gift taxes paid, right? Jane is a U.S. resident. She hasn't made any foreign gifts that would be reported in a foreign jurisdiction. So thus we have no credits for foreign taxes on line 13. So the total credits that are being applied is $1,495. Now the balance, subtract 14 from line 6, we get $1,495 minus $1,495, and so we're left with 0. Again, we don't have any GST, so line 16 is blank for us, and so the total tax for the year that would have to be paid with the return, we add lines 15 and 16 where they're both 0, so line 17 leaves us with a balance of $0. All right, so high level what's happening here, right? You can make taxable gifts throughout your lifetime. If they're over the annual exclusion, you've got to report it on the return, but you're only actually going to start to pay gift taxes if you've made enough gifts to basically erode at this entire unified credit amount. So Jane has used $1,495 of the unified credit, right? But she had this balance, $5.3 million, is substantially higher than that, and so that's why she's not actually owing any gift taxes with the return. And this is what often is quite confusing to some, is they think, well, if I've got to file a gift tax return, I should certainly have to pay something, right? Why aren't I paying? And this is why. Now, if you're a taxpayer that's made some substantial gifts over the course of your lifetime, you might have already used up your entire unified credit, and so for that reason you would have to start actually paying some gift taxes with the 709, but in this example we don't have to do that. Alright, so I hope that was helpful. That covers it for this video. Thanks so much for sticking with me to the end here. I'll put links in the description below to all the other 709 tutorials I've got, so go check those out if you want a little more information. And thank you again, and I look forward to seeing you on the next video.